So basically, insurance, you just remember 5 fingers. What are the 5 things? First is your hospitalization. Okay, next is the personal accident. These 2 are the must. After that, we'll look at the early critical illness and the critical illness, and then followed by total permanent disability and death.
Hello Tianshens, welcome back to my channel, The Lao Chio. This is Pauline, and in the previous episode, we have Jeannie with us to share with us more about financial knowledge. So what is protection, why is it so important, and how do we assess in terms of the different insurance? What are the 5 things that we're going to look at? If you forgot what is it about or you have not seen the last episode, just go to the previous episode and you will know the importance of insurance and how to get one that's suitable for you. But today we're going to dive deeper into how do we choose a financial advisor and what are the steps involved. It's more like the nuts and bolts about getting our own protection. Hi Jeannie, welcome back to this episode. Maybe you can let us know, how do we choose an FA? Yeah, what are the kind of let's say the criteria, and what are the questions that we should be asking to know that this person or this FA is suitable for me? Yeah.
First and foremost, you need to like and trust the financial advisor. Okay, you need to know that whatever this financial advisor says or do, it is really for you, and it's not product pushing. How do you know? It depends on the questions that they ask. Whether they are catering to your needs. Sometimes it could be a longer process because there's a lot of things we need to find out before, like doctor like that. You tell us your symptoms. So the more you tell us, the better we can diagnose. So this is what we do as an advisor. So you need to find someone whom you can really talk to and you trust, so that you can tell them exactly how much you have, what are the things you need to protect. Sometimes we even have people who come and tell us they have a second family. So there are secrets like that, right? Yeah. So if it's your family member and it's a financial advisor, you realize you cannot tell this person such a thing, then you probably have to find someone else. But whether someone is product pushing you or not, you will know. Correct? Yeah.
But when you mention about this thing, someone whom I like and trust, more often than not, based on my previous experience, is that we tend to go towards people whom we know, like for example, our friends, our relatives. But sad to say, from my personal experience, I'm just going to say it's my personal experience. After that, I started to realize also many people, because of that, wanting to support family and friends who are in the financial advisory field or financial institutions, they may not, buy the right thing or get themselves the right protection because they think about supporting the family members or friends. What are the questions, right, that I should be asking the person? Yeah, so that I know he or she is really giving me something that I need.
For example, you really need to make sure that you have all your questions answered. I don't know what questions it could be, but it's more of your concerns. The thing is, you do not know what you don't know.
Yeah.
So sometimes speaking to more than one advisor might help. So then from there, the different advisor will plan differently. The processes are different. At the end of the day, you go for the one that you feel can do a better job for you. Yeah.
So what are the yardsticks like? I think the best way is, I'm now your client, right? Yeah. So I've met you, let's say, for the first time. So what would you ask, right, as a financial...
Okay, if you come to me and you're very open to it, the first thing I'll ask, in order for me to help you, I need to see what you have first. So whatever I do, I will just go through what you have, and then I will ask you certain questions, and then you reply, you let me know whether the planning is done as such. Yeah. So for example, if I see something like, hey, you got a mortgage insurance, from the bank or whatever, but I see the mortgage was like a 10-year term, and then I'll ask you, you intend to pay off your entire loan in 10 years? Because to be frank, I don't know what was the conversation between you and the previous advisor.
Okay.
So I have to give credit to the other advisor, not to put people down, to understand what was the conversation that led to such planning.
Okay.
If you don't know, and I say, I don't know that, the person just let it alone, then I also know what kind of advisor this person is already. For example, savings plan, what's the most common? When I see savings plans, 25 years.
Yes.
It's like, yeah. Why,
Yes.
Because the commission is the highest to be very upfront. Yeah. So usually, and then when it goes to term plan, without looking at it, I was like, okay, I see term plan until 65 only. They say, yeah. Because anything above 65 is actually expensive. So actually, is it catered to your needs? So when I come across, term plan, buy term, invest the rest, plan until 65, but this person has children. So I will ask do you know that after 65 you have no coverage? Are you okay with that? And then you have children, you told me you have 2 kids. The youngest kid will be like 20 plus by then. What happens if you fall really ill and you have no coverage? Who is going to bear the cost? And then I will let you answer.
Okay.
Yeah. So it really depends on, I have to assess based on what you have first. Then I will ask the questions.
I see.
Yeah. Because if you say, never mind lah, I don't need treatment lah, I just go and die lah, things like that, right? Then I say, okay, fair enough. Then the planning was done according to what you want.
Yes.
If you don't know that this is your risk, then I say, this is me highlighting your risk now.
Okay.
Correct. So usually I will base on what you have first, then I will ask you the question.
So from what Ginny has said, I think the very first step is when we talk to a financial advisor, before they let us know what's in the plan or what's the upcoming thing, that's a new thing, they should assess what we have right now. And the word would be, is it adequate?
Yes.
Right. I think the keyword would be, is it adequate? Okay, you might have said, yeah, they will always say it's not enough. But if they want to tell you that it's not enough, it's inadequate coverage, maybe you got to ask them, why is it not enough? Maybe you got to calculate for me to know, because many a times, just like me, when I bought my insurance, I started to buy insurance at the age of actually 16 years old, which is like 30 years ago. Yeah, right. So at 16 years old, that time when I bought was because one of my cousins come to me and talk about a savings plan. Then I thought, wow, it's a forced savings, sounds good. So it falls under what you mentioned, that 20, I can't remember, it's 21 or 24
25 years, usually
plan,
25.
right? So this is right. Okay, I've gotten the back the money, but sad to say it wasn't a lot, right? Yeah, because after all the inflation and so on. And that brings me to the next point. You might be also asking, so how do we then calculate? Maybe some simple calculation.
Early stage and critical illness, there is a rule of thumb.
Oh, there's a rule of thumb. Okay,
Yes,
great.
so the rule of thumb for early stage is between 1 to 2 times of your annual income.
Okay, write it down. 1 to 2 times of your annual income. Right now or future income?
Right now, because
Right now,
we are
okay.
Calculating based on your liabilities now.
Okay.
Yeah. If you want to plan ahead, go ahead.
Okay.
Because you know that you will eventually increase in salary scale,
Yes.
and you want to plan ahead. You can always overplan. But like you say, can I afford it?
Yep.
Do I have enough? If
Alright.
you buy insurance, then every day you have to eat bread and drink water, then I say no lah. That's not the way you plan. Correct.
Okay.
So then for the critical illness, in a protection part, or we call it income protection, rule of thumb used to be 3 to 5 times.
Oh,
But right now, I would say only in Singapore, right? I would recommend a 4 to 6 times.
wow.
Why?
That's a lot.
Yes, 4 to 6 times of your annual income. Why? Is because of the cancer drug list update by MOH. So for those who have your hospitalization plan, the thing is there is a cap to the cancer treatment claims.
Yeah.
It's not a lifetime limit, it's not an annual limit. It used to be like, it could be 1.2 million, 1.5 million, but depending on different cancer drug list classes, there is a cap. So this is across all insurers.
I see.
So what happens if it exceeds the cap? It has to be out-of-pocket expenses.
I see.
So you can either plan for 4 to 6 times of your annual income, or you get a plan based on just cancer protection alone. So let's say if you already have that 3 to 5 times, and then you want to look at it, you realize there's a gap. You can opt for a cheaper alternative, like just the cancer protection.
Okay.
Yeah.
So that's how we can plan. How about then the dependence part?
The dependence part would be like you're talking about
life
your
insurance.
children or your... Okay, so for children, a lot of parents, another mistake that actually a lot of people do, right, is that the baby's so precious, the children's so precious, so they got all the protection for the children. Then when I look at the portfolio, I'm like, wow, you must sayang your kid a lot, right? But you forgot to protect the most important asset. I say, yeah, yourself. I say, why? Because you need to think of the airplane rule. When the oxygen mask drop down, they always tell you save who first? Save yourself first, then you save your kid. Why? Because if you save your kid first and then you faint, do your kid know what to do to save you? Don't know, correct? So you need to save yourself first. If your kid falls sick, let's say even if your kid doesn't have the income protection, correct? Can you work to earn the money to take care of your kid? Can. But if you fall sick and you don't have the protection, but your kid has the protection, can the kid earn money to actually take care of you? So like you say, it really depends on the affordability. As far as possible, yes, get the protection for your children. But if you cannot afford, protect yourself first.
Yeah.
Cover yourself first, and then if you have access, then you can cover your kid. Because to be honest, when your kid grows up, we always do review. That amount, that 100K, 500K will not be enough for the kid already, plus inflation. So eventually the kid will have to plan for themselves. Yeah. So always protect yourself first.
Yes. So this is where we have to understand how a financial maybe consultant would actually speak, and how they would assess your need and help you to do your calculation. And I believe if a financial advisor or consultant, they know what they are doing, right? They would be there to educate you. When you want to choose an FA, you should be able to trust that person. That person need to know how to ask the right questions such that you are not confused. It should not be a case where if they don't convince you, they confuse you, right, into buying. I don't think that's the right way. So they should be able to convince you, and they should give you a clear understanding of your overall picture. So now let's say I know about my overall picture, what I need in terms of protection. How often should I be reviewing it? Yeah, or meeting you, like just now you mentioned a few years you don't need to see me. Is that going to be that way?
So unless, right, you have certain goals that you want to plan for, or you have a change of job, or maybe when you have a kid, these are the times where you might need to have your protection reviewed. Yeah. So why change of job? Your income could have increased or decreased. Or when you buy a new home, there's actually a increased liability.
Yeah.
And then if we look at it, can you actually afford it? So usually my clients also come to me before they get a new home, they also come to me. How much can I afford? Will this be pushing my boundaries, things like that? So we do beyond insurance. We see your entire financial portfolio as a whole. Yeah.
I think that's the key thing. It's not just about insurance, it's not just about protection, but the financial planning as a whole. I think that's the key word for us to understand about our financial status right now, our current, our goal, and what are the gaps. And from there, we come up with different solutioning at different life stages. So this is where we have to assess it ourselves. And sad to say, everyone's different. Just like what Ginny has said, there is no one size fits all. So if you want to know what is really adequate for yourself, really some homework has to be done, right? Or get your financial advisor to educate you with what are the latest, like for example, she mentioned, let's say there's certain coverage that has not been covered, you need to know. So when we talk about coverage and things like that, I'm not sure whether you have done any claims before, but I have. I've done a few claims when it comes to hospitalization and surgical plan, as well as in terms of critical illnesses, right, for my family member. So the next thing that we may be asking, and I think a lot of people might not know, is how do we submit a claim if anything were to happen? Yeah, what should we do next?
Okay, so usually for hospitalization, right, the hospital will do the e-filing for you. If they don't, you will have to end up going back to the hospital to ask them to e-file, then it will be in the system. Yeah, so for critical illness, firstly, it will be the diagnosis of the doctor. So the claims form will have to be printed when you go and see the doctor to tick off the checklist to make sure that it fulfills certain criteria, then it's claimable.
Okay.
So sometimes claims don't go through, because the doctor refused to write certain very critical words.
Okay.
Yeah, and sometimes claims go through very effectively, very quickly, because doctors are very decisive, they know exactly what is it, and they write so that you will get the claim.
Okay. So I think one key thing that I've learned from one of the claims that I have done was to really, I want to read. I think not every one of you have done that before, is to really read what is inside that clause, right? And understand what that clause is about. If you do not understand, you have to find a financial advisor to say, okay, things have happened and this is what's happening, and maybe use that clause. I want to consult the doctor. Yeah, I think that's the best way. We won't know it ourselves. So the best thing is really, we can't be so-called lazy about it, right? If we have put in the money to invest in a protection plan, what we need to do is we really need to know what we are buying. And touch wood, if really times come where we need to claim, read about the clause and go over to the experts, the financial advisors or the doctors to support you in that.
Okay, so for the death coverage, right, usually we will share that there's two ways to calculate. One is we call it the lazy method lah. Okay, 10 times of your annual income. And another way is expenses.
Okay.
So the thing is, we'll ask, who are your dependents? Is it your parents? Because death coverage, if you expire, who needs your money? Correct? Who is dependent on you? Is it your parents? Is it your children? If it's your parents, how many years do they need it for? And then same thing, if it's for your children, we'll always take the youngest age of the child.
Okay.
So let's say if your daughter is 3 years old, how many more years do you want to support your daughter for? They'll be like, oh, after uni, which is about 24 years old, so that will be 21 years times the family expenses, the annual family expenses, and then you calculate. So if you realize, right, the number between 10 times annual income and the expenses method is very close. It's about the same. So yeah, there's two ways. Then you choose either in between or you go for whichever one, which we will eventually run the quotes for you and see which one makes more sense.
Yeah. And that's where after that, then we talk about budget, okay?
Yeah.
Yes, we need to assess our needs first. What do we need? It may blow up your budget, but it's okay. At least you have that in mind to know that, all right, I need to cover for this, all the 5 different aspects. And from there, prioritize based on the budget, which is on a critical basis, and which other ones maybe in future I need to review it. So today we have talked a bit about insurance protection and how to really select a financial advisor, and if there's anything, how do we do our claims, what are the steps and what are the things to take note of. So if you do have any comments or there are more things or more questions that you want to ask regarding this area, feel free to write in the comments below. If you found this useful, show your support by hitting the like and subscribe buttons. Share your thoughts in the comments below and let us know what you'd like us to cover in the area of insurance protection or even growing your money. Remember, it's all about taking care of your body, mind, heart, and wallet for a happier and healthier you.